Okay, you mentioned the metaverse. Facebook is making a multi-billion-dollar bet on it. And this week, Apple unveiled the Vision Pro. Mark Zuckerberg taking a swipe a bit at that and the price of it. How big of a risk, a danger is Apple's move to Meta?
Well, look, I think in the end of the day, whenever a $2 trillion company decides to focus on something, you need to pay attention to that. And so I think the reality is that the Apple getting involved or putting a stake in the ground and putting a device out is a big moment. I think it helps the whole category broadly. It brings a lot of attention into the AR and VR space. Now, how it actually plays out, it's such early innings. I don't think even Apple seems to believe that a $3,500 device is going to be a consumer device. It's a first step of an experiment they're doing.
But how does Sam, how does this help Meta if they're subsidizing their hardware, right? If Apple comes out with something that's just as popular or more popular and Meta was subsidizing its headsets as an ecosystem play, how can you continue to do that?
Well, I think there's a few things to keep in mind. One is no one really knows yet what the future of VR and AR is going to be experientially. Apple has a kind of personal computer or personal vision of the future. Meta's is obviously and unsurprisingly far more social. So we're in such early innings, it's really hard to know how this plays out. In the end of the day, I think the real story on a lot of this stuff is where is developer mindshare going and where is consumer excitement? We're in a moment where everyone's talking about AI, and that's great. I think Meta has a really interesting AI story ahead of it, as do a lot of companies. But the VR AR story on a relative basis has been less top of mind. That means fewer developers, less attention, less engagement. I think this is a moment where we're so early that I really do believe that effectively a rising tide lifts all boats. The war will come, right? Don't doubt that. But it's not this year, it's not next year, it's probably not in the next 3 or 4 years. It will be down the line once this goes from being a niche to a category.
Let's talk venture ecosystem. There are less companies getting funded. Some are running out of money. Investors like yourself have been triaging them. What are you doing for the rest of the year?
Well, that's a great question. I think the reality is that there's always great companies getting started. We invest in companies super early and, we see a lot of interesting stuff. We as a firm are staying away from AI, as are a lot of my colleagues I respect the most, because it's an unfortunate nexus of extremely overhyped, meaning pricing is very difficult. And I think a place we're going to see a lot of startup failures. Despite the excitement, I think a lot of the victories there will go to the big platforms, the Metas, the Googles, the Microsofts, et cetera, as opposed to kind of the startup world. That said, I think there's a lot of great business being started across the board, as there always are. In the later stage stuff,
if not AI, what are you investing in?
Look, I'll be honest, I'm very excited about the small business ecosystem world right now. I think one of the things I'd say is happening is that there's a lot of the world is reckoning with the fact that a lot of these unicorn-style companies that look super attractive on paper, they're never going to get liquid, and they're going to kind of languish for long periods of time as companies that can't go public and can't get acquired. And I think that form of entrepreneurship is very challenging in the Valley for a lot of people. What is true, though, is that people want to own and start businesses. And so platforms that help people own and start businesses in America, I think there's a huge set of opportunities there. We've invested in many companies like Team Shares, et cetera, in that space, and we're excited to see more.